This is a chart of USO, the United States Oil Fund. And it's been pretty much going sideways in a very narrow range for the last few months. But let's say that you were anticipating a breakout from this range. It's at the bottom, so we would anticipate that it would break higher toward the top of the range, which right now is about 1155. But the ATR for USO is only 0.2, so this is not a big mover. And particularly if you're trading options and you had a 2-point option spread, the chance of the USO moving through the spread is pretty thin because the ATR is so small. So rather than trade USO, many people will trade oil stocks or other indexes. But the fact is that the correlations between USO and oil stocks in the different sectors of the oil or the different industries within the oil sector probably is not what you think it is. And to look at that, what we did was we went to calculators and we went to correlation chart, and we've already done this. But here's the correlation chart, and for USO, we'll see we have Chesapeake, Valero, Schlumberger, Halliburton, ExxonMobil, and a few other oil stocks, and the oil services index and the oil producers index. But here's the surprising thing. And the way you read this is you have rows and columns going from left to right, and the rows go from top to bottom. But if we look at the correlation over the past 2 months between USO and Chesapeake Oil, it's only 22. It's positive, but it's a very low correlation. We want to see at least 70, 80, or 90 if we wanted to trade Chesapeake as a proxy for USO. So if we look across here, we see Chesapeake, Valero, Schlumberger is only 4%. There's barely any correlation between Schlumberger, Halliburton, and USO. And if we look at the majors XOP, it's up to 30, which is a low positive. And I mean, we chose stocks here that they're popular, they're very liquid stocks, and the options are very liquid also, and that's the reason we selected them. But the interesting thing here is that none of these stocks is a good proxy for trading what you may think is a decent move in USO coming up. And what you'd have to do is you'd have to look at OIH and XOP and then look at the different correlations within here. I mean, we can see that XOP, the ETF for oil producers, the relationship with Chesapeake is very high, 96. With OIH, the oil services sector, it's high. Oxy Petroleum, it's high. ExxonMobil, it's high, and Schlumberger, it's high. But the correlation calculator is really useful for things like this because often the correlations are not what you think they are, and you're going to be better off looking for individual stocks or one of the other oil-related indexes than looking for a proxy for USO. And just one other takeaway here is here's VLO. Valero. Valero is primarily a refiner, and you can see that the refiners have a fairly low correlation with the other kinds of oil companies, drillers or service companies. It's highest with ExxonMobil, which is integrated and also has refining capacity. All right, I hope you found this useful. I think this is good information to tuck away for future use.